All right, ladies and gentlemen, welcome aboard to this volatile little trading session today. Quite good timing for a discussion on the VIX. I'm actually glad we're able to chat tonight. We just saw the biggest spike in the VIX we've seen, I think, in over about a year. In about a year, so this will enable me to give you some live commentary on how to apply maybe what we talked about last week, and today we're going to follow that up with some more commentary on some different ways of trading the VIX. Okay, so yes, definitely good timing for today's discussion here. All right, I've got my screen up and running here, and apparently my neighbor is mowing his grass. So if you can hear that in the background, my apologies. Um, I'd I'd go out there and tell him to pipe down, but he just moved in, so I got to be a nice guy. You know what I mean? Okay, so I don't know if you guys saw, but I thought after last week I wanted to write out some takeaways, some key takeaways. If you did not see these notes, I will make sure you get them downloaded today. Okay, so I just wanted to summarize what do I think were the key takeaways from last week's discussion. So I typed those all in a document for you. I'll make sure you can download it. Um, if you weren't here last week, no sweat. You can watch the recording. You can grab these notes. But this basically are the key points. So if you understand these points here, then you're A-OK. All right? So in light of what we talked about last week and in light of what happened today, let's talk about some application. Okay? Let's talk about some application. For any newcomers, welcome out, by the way. This is Tyler Craig, Coach T. Very excited to be here. We are talking about all things VIX, V-I-X. It's an index known as the volatility index that measures fear in the marketplace and measures how much people are paying for insurance and for option contracts. So this is a chart of the VIX. You can see today we got this big old spike here. We were up almost 50% today in the VIX. Okay. So why did we go up so much in the VIX? Well, if you look at the stock market, here's the S&P 500. We were down almost 1.5% in the S&P. This is the biggest down day we've seen, I think, since May. So it's been months since we've seen this big of a down move. People are anxious right now. Okay, you rarely see a spike in the VIX without a big sell-off. I mean, they really just go hand in hand. And so, if you were to ask anybody that's a trader, hey, how do you feel after a day like today? Well, they're anxious, right? I need to take a Xanax. I need to chill out here because the market's making me bonkers. Well, that's reflected in the VIX. Okay, so we had a big pop in the VIX. So yeah, maybe it's North Korea. Maybe it's seasonality. August and September historically are the two worst months. So seasonally, you get a lot of corrections at this time of the year. The question is, what do you do about it? Okay, what do you do about it? Well, let's look at what we talked about last week. What are the implications of the VIX jumping up to 16? Okay, well, when the VIX is high, what did we say last week? Maybe tighten stops and consider taking profits on bearish trades. Okay, did anybody have bearish trades that made money today? Anybody have bearish trades that made money on a day like today? I think if any of you had bearish trades, you should have made money today. Maybe not on your bullish trades, but definitely on bearish trades, right? I mean, today was a day where you made money on bear trades. So what do? What's the follow-up? Well, don't get greedy, okay? Because the VIX is spiking so much, because there's a lot of fear, this is often a time where you want to take profits or tighten stops, okay? So because the VIX doesn't usually spike and stay up for long, usually opportunities to take profits on bearish trades into weakness like this are fleeting, okay? And so what I don't want to do if I have a bear trade on is I don't want to let the market completely recover and not take advantage of the fact that I really just came into a lot of money on bear trades. Okay. So what does that look like? Well, it depends on what trade you had. Okay. For example, I had some straddles on the S&P. Okay, and I've been losing on them for a while, but I finally made some money today. Okay, so I'm making money on the long put side of my straddle. So taking into consideration the fact that the VIX popped a lot, I considered taking profits on that bearish trade, that straddle. Okay, so I actually took profits on that today. Okay, so that's takeaway number one. All right, if you had some bear trades today and you rang the register or at least tighten stops in case we bounce back tomorrow, probably a good idea. Okay. B, avoid entering new bearish trades. Okay, so like take IWM for example. This is the Russell 2000 index. This thing looks even uglier than the S&P. Is right here a good time to enter maybe a new bearish swing trade? Say, oh, the market's ugly. Let's enter a bear trade here. Part of you says, well, I mean, the market looks terrible, so I guess we're just going to go straight down now. But see, looking at the VIX would give me a little bit of pause. Say, well, we're pretty overbought in the VIX, which may signal the market's close to a short-term low. So that causes me to pull in the reins a little bit and not go bonkers in entering bearish trades. Okay. I'd rather wait until the VIX comes back down and the market maybe bounces a little bit to enter bearish trades. Okay. So if you wanted to go bearish, don't wait until the VIX jumps 50% to do it, right? Either you already were doing some bear trades or you're waiting for the market to bounce and the VIX to come back down.